Okay, everybody. So I was a little indisposed today, but just looking at the tape, I think we've kind of made a turn here, which frankly kind of surprises me. But got to listen to the market. The market's always right. See, I had said that as long as we're below this like 567.50-ish level, the market wasn't going to go anywhere, and we broke out. Now we're up at our next level of resistance, 575, and if we get above this, I think we're going to have a really nice move higher. A big part of this, obviously, is Apple, because we talked about how the market wasn't going anywhere until Apple got back above this important 220 level. And as for now, it has, right? I mean, you can see this level was important. It was support in October and November. Then it became resistance, but it broke through. Another bullish thing is the action in Microsoft, right? Microsoft was in this rectangle pattern, which is really just a trading range. If the market's going lower, the sellers are in control. When you go into a trading range, it shows that the buyers and sellers are kind of equalized. So we go sideways. And a lot of times, well, not a lot of times, all the time, every time, right? If a market says going down, what does it have to do before it starts going up? And the answer is it needs to stop going down. So when the forces of supply and demand become equalized, it could show us that the forces of demand are about to take over. So really bullish action in Apple, really bullish action here in Microsoft. We're going to go look at the financial sector here, right? And this was kind of a clue this was coming, I guess, but really positive action there. Well, I don't want to get too over out of control. I'm just saying it's some bullish action. Probably getting pretty close to resistance though. Now, one thing that I think is really interesting about this is a lot of the money that came out of the tech sector went into the stocks that are perceived, and notice how I say perceived and not are perceived to be safer. For example, consumer staples. If we look at this, look at the move down here, right? So now it's the opposite. Before it was people were selling tech, buying things like consumer staples. Now they're selling consumer staples and buying things like tech. You could also see kind of a similar action in the utility sector. That's a really big move down here, right? People are bailing out of utilities and going into the stuff that is considered less safe. And notice I said consider, but not necessarily. All right, let me just see what's going on here with gold. Kind of going sideways. I wouldn't be surprised if we see a little bit of downward pressure here, because this was kind of a flight to safety thing as well. All right, everybody, make sure you check in tomorrow. I appreciate it, but just a quick look here. Sometimes moves in markets don't have to be big to be important, and sometimes a move can be big and not be important. What's an important move? Well, a move that breaks support or breaks resistance or reverses off support or reverses off a resistance. Today the S&P was only up 25 basis points, but look at the action, right? We had a gap up. This could be a breakaway gap, another gap up. So even though this was a very small move, it was still an important one. And if we clear 575 tomorrow or the next day, we're going to have another run. I think we're going to have another run higher. Okay. Thanks, y'all. I'll see you soon.